Well, there's seldom, if ever, actually, I can't even remember the last time I said that I felt jealous. Not only felt, but I admitted I am jealous. I'm jealous of this wonderful economic survey. The form is certainly good, but so is the content. And when I did it many years ago, I thought I'd made a huge qualitative breakthrough, but I'm afraid it doesn't match anything like this. Full of detail, great new research, and largely objective. Many, many congratulations, Arvind Subramanian, Chief Economic Adviser, but it's nothing to do with you. It's all these youngsters here, right?
Yeah, the team, exactly. It's a huge team, yeah. In the economic division, team CA, people here, people outside.
Excuse me, there's actually
it takes
the
a village.
first 2 pages,
exactly,
a list of names.
And
that's why I didn't have so many people.
And I'm pretty sure that we've missed out on a lot.
That's sort of the worrying part.
That's a really worrying part. And I want to pay particular tribute this time, apart from all the usual people, to so many people in government. You see, we say, for example, last year, this year, we've used big data, right? But someone has to give us the big data.
Yeah.
And it's people in government,
Yes.
Undersecretaries, directors, not the big shots, so many of them who have given us the data. I have, if I may say, I want to just personalize this a little bit, that probably one of the nicest moments, and Kapil was witness to this, so we asked for some data, and normally you have to follow up and then go back and forth. But this person working for one of the government agencies, his name is Nilendu Mishra, I think, and he gave us data, and he gave us much more than we asked for, and he gave it quicker than we asked for. And we said, why? He said, sir, we just love the work that your team is doing.
That's what I was just going to say. They've seen the earlier economic surveys and see that you use the data properly with in-depth research.
That was very, very moving.
And this is the entire team. Let's have a look at them, and round of applause to all of you. Really well done. Fantastic stuff. Of course, I don't agree with any of it, but otherwise it's pretty good. One quick question. Why this color?
Well, I already got a lot of flack on social media for this, but I just, a small gesture of, solidarity with the fact that this is the year of women, Me Too, so many issues in India as well. We have a big chapter on gender as well.
So why should you get flack? Well, social media.
So you mean exactly. But also our daughter is very much into the women's movement, so she's been a big inspiration as well.
And I hope all of you are, and I hope you implement this in the government of India. That needs a lot of restructuring. Many, many more women. Must be 80% women, if not more.
Actually, the Indian Economic Service, the one that I oversee, has, I think, more. It's like enrollment now, or all over the world, enrollment, graduation, women have surpassed men. So,
see, if you want to be as good as NDTV, we have 70% women.
Oh,
women are
okay,
better than men.
Okay,
right?
good. Okay.
We need male emancipation here.
Okay, good. Okay.
But anyway, let's move on straight into it. We've got a lot of ground to cover. We may not be able to do justice to both these, but we've taken the main points in it, and really there is so much research done here. I'm not just being praising you in front of you. It is wonderful research. But just the macro, the traditional macro data that you brought out about India, which is what we used to stick to in the old days. Let's start with that.
Okay, sure.
Let's start with 3 good news points and 3 worrying news points. Let's start with the first good news points. Well, it looks something like this. There's good news number 1. The economy is doing better than expected, and the survey predicts an upturn now.
Yeah.
What do we mean by that? Let's have a look. Here's the data straight from the survey. And they call this the fan graph because fan chart. Sorry. Maybe is it not a Arvind Subramanian fan?
No, the central bankers use this word.
Yeah, because it fans out at the end because there's a range.
Yeah.
So you can see since 2015, there's been a downturn in the rate of growth. Of course, we've had a positive rate of growth throughout, but instead of from 7.5, just over 7.5, it dropped to around 6.5, and now And this 6.75.
So just to be clear, the
Yeah.
CSO official forecast is 6.5, but we think it's going to be 6.75,
correct.
and I don't think the CSO would dispute that at all. I think
Right.
they had to make their forecast based on 2 quarters data,
Right.
and the
you've got
latest
more
data were much better. Yeah.
And your upturn you're suggesting is that it's going to be next year between 7 and 7.5. I'm glad you stuck to one decimal place and didn't say 7.58.
Yeah, I know. This is that. It really gets me actually.
So why this upturn?
Basically, 2 or 3 reasons. One is that to understand why the upturn, you have to understand why
the downturn.
happened in the first place, right? We think that the downturn, because remember, the downturn is very interesting in itself because it happened, the deceleration happened when the world was actually accelerating.
That is the huge
So we decoupled
decoupling,
from the world, right?
Yeah.
And there were basically, I think, 4 reasons for that. One, interest rates suddenly became much higher in India than the rest of the world. Then we had demonetisation and GST, 2 structural actions with some interim impacts. Then oil prices went up. Right, this year oil prices have been much higher.
Yes.
So going forward, the impact of those 2 actions, GST and demonetisation, I think are pretty much behind us. They've dissipated. So that gives you automatically some delta on growth going forward, a positive delta.
So this is not just a base effect. You've got a low base and you're going to
it's not a base effect.
7.5.
No.
You're saying a genuine...
Yeah. Okay. So some of the... So when the negative impact goes down, that's like a positive impact as well.
Right.
Then exports are doing well, and the world economy is picking up, trade is picking up. So that's going to be another boost. And there is also, government has been providing, injecting demand, and there is the possibility that, with all these actions that the government has taken on what we call the twin balance sheet, i.e., putting resolution, recapitalization,
On
that
the non-performing assets,
on
the
the
bad debts
non-performing,
and all that.
on the bad debts,
Well,
that could also provide something. So that's all the positive deltas, but there also may be offsetting negative deltas even going forward. One of them is oil prices.
We'll come to exactly
So,
these because
So
you list them very clearly in your...
So the sum of these 2 we think could increase growth anywhere between 0.25%, because you start at 6.75, it could be a quarter more, which gets you to 7, or it could be 3 quarters more, which could be 7.5.
Right.
So that's the roughly the analysis.
Okay, let's have a look at good news number 2 in the survey. Now, this is quite important because there was a big worry about how industry is doing in India. Industry, according to the survey, may be picking up. There's been a slight improvement, again, after a slump. And let's have a look at the data that the survey provides. Look at that. Since 2015, quite a dramatic slump, actually, from 15% down to nearly 5%. And now we've just seen 2 quarters, slight improvement up to around about 10, but then a downturn again. So this is still fragile, this upturn in industry.
Yeah, I think that, again, one has to be clear that we can see directionally things improving quite a bit. Now, a complement to this, which I think is sustaining this and what contributes to the upturn as well, manufacturing export growth is doing at about 11.3% in the first 9 months of this year. Remember that in 2016 and 2015, manufacturing growth was actually not doing well at all. So as the world economy has picked up, this has picked up as well. Right. There was a blip, a GST-related blip in the second quarter of this year. I think we've seen through that. And so now the forecast for the year as a whole, I think, is for something like 4.5% manufacturing growth by the CSO. So, but it's still level-wise, still not
That's
well
what
back
I was
to
just
me,
going to say.
but I think directionally improving quite a bit.
Directionally, but 4.5% is very worrying. I remember, I mean, I've been a China follower for the last 30 years. And in their heyday, they were talking about 18, 22, 23% manufacturing growth rates. 4.5%.
Yeah, I think, but I think let's see, because I'm hopeful that with exports picking up, that could be what pulls up manufacturing as well going forward. World economy is doing well, but then remember that we've also seen a pretty big appreciation of the rupee, i.e. competitiveness has suffered quite a bit. So the world demand effects...
I'm just saying that appreciation mainly against the dollar, right?
No, against a basket of currencies.
Against a basket of currencies.
Yeah, against a basket.
Okay,
But
here you mentioned the dollar, but
it's also against a basket. Yeah, exactly. Yeah.
Okay. Okay, so that will be a bit of a headwind.
But
for
headwind,
export
but
growth.
world growth will, I think, take us
Counter
forward.
that.
Yeah.
And particularly Europe, that's been the big surprise.
You see, no, actually, if you look at the latest IMF's World Economic Forecast, for the first time since 2010, it's been the most broad-based global recovery since 2010.
Right, right.
And something like, 80% of countries are growing.
Right.
So that's what's very unique about this. And as a result, growth is up and trade is also up.
Right. Let's now have a look at good news number 3, and this is to do with exports, which you were just mentioning. Exports are rising after a dramatic slump which worried everybody because, as you said, global economy is going up, growing faster, and our exports going down. So our share in world market, which is anyway only just over 1%, was also going down. But again, after a slump, exports have begun to go up. But again, the slight downturn always, even in industry.
See, I think we shouldn't look at every up and down. I think I look at it much, the trend. The trend much more is that April to, as I said, April to December, 9 months, it's 11%. And if you look at the survey, we compare it with how other countries are doing.
Right.
And what you saw in 14, 15, 15, 16, our growth was lower than growth in other countries, especially in Asia. Now we're on par with Asia. So that 11% is kind of growth is what many other Asian countries are doing, or at least the dynamic ones are doing. Yeah. But I think, again, the good news is that this is up. There's upside potential in the sense that if our exports are even more responsive, then potentially exports would go up by even more. For example, in the 2000s, I think our exports were actually more responsive to growth. Then they came down, but now they're picking up again. So it's possible that we could revert to that.
So what was the cause of that slump, export slump?
Well, you see, remember that one of the reasons we say in the second quarter, the impact of, I've already mentioned the rupee, right? The rupee, see, remember, since about 2014 or 15, the rupee is appreciated by about 20% competitiveness against a basket of currencies. That's quite a lot.
Should we have allowed that? I mean,
See,
we have this old-fashioned idea that the strong rupee is good for the country, but it may not be anymore. I mean, whatever is good economics is good for the country.
Yeah, I think there are two views on this. I think that the East Asians,
like most things
Chinese,
in economics.
Yeah, the Chinese, for example, have always believed in a competitive currency, right?
Yes, yes.
But I think, to be fair, there's no free lunch in this business, right? Because the reason why the rupee has appreciated also because capitalists come in. A lot of foreign capitalists come in, including good capitalists come in. So the trade-off is that, you accept more capital, which is good for growth. What happens? Your currency suffers. So you got to balance these two things. Right. But I think some of the research that we've done in this, and there are people here who can speak to that in fact, we find that if you want to boosting investment is very important, and for that a competitive currency is very important. So I think that's also one of the headwinds that we've encountered. But now growth is picking
currency,
up.
That's the closest thing you would ever say to we should devalue a little bit.
See, no, okay.
Let's not go too far.
Yeah,
right?
yeah.
Okay, those are the 3 positives. Let's have a look at some of the three kind of worrying trends that the survey points out, and I appreciate it for actually highlighting positives and the worrying part. So the first worrying trend is that investment, what you call gross fixed domestic capital formation, is falling. Both public and private downturn in investment, and that's since 2007 it's been going lower and lower and lower, and it's now under 30%, it's 27% or something, from 36, 37%. And there's no sign of an upturn there. What to do about this? This is the engine of growth, right?
Yeah. What India saw, there's a whole chapter on the investment and savings slowdown. And what we saw was that investment went up very rapidly by about 9 percentage points in 4 years. And then the global financial crisis hit. And then there's been a steady decline over time. Now, this has happened all over the world. But I think what was distinctive about, not completely distinctive, this has happened to the Asian countries after the Asian financial crisis, that this downturn in investment, by the way, which predates 2014. It started long ago.
From 2007 onwards.
From 2007 onwards.
No, we're not making any political points
Exactly,
here. No,
yeah.
no, no, no.
It predates it. It's what we call a balance sheet recession. That when companies overborrow, banks lend too much. The whole financial and corporate sector kind of freezes up. And that takes a long time to reverse. In fact, Carmen Reinhardt and Ken Rogoff, these two Harvard economists, did a lot of work on this. And they said that basically if you get these balance sheet recessions, it takes a long time to recover.
I think it's mentioned there, the turnaround is much longer than normal.
Much longer. Yes. And that's what we've seen in India. And remember that we've had this, what we call the same problem here in India. But I think if you look at the latest data, the last 2 quarters, we see investment, perking up again after a long time. Okay. So both, in between, the government tried to offset this private investment decline with ramping up public investment. Now we see probably, the early shoots of a private investment picking up. It's still not at, 8 or 9% growth. It's about 4% growth, I think, in real terms, the latest number. But that's what I think needs to pick up.
So you refer a lot to the TBS, twin balance sheet.
Challenge.
In India, we love these TBS, GPS.
Yeah.
I mean, GPS is fine, but 3 letters for everything.
Yeah.
Explain to my uncle and aunt what is TBS. What's the twin balance sheet problem?
See, I think a twin balance sheet means there are 2 balance sheets, right? One balance sheet of firms. It's the firms that borrow and spend, including on capital goods, that gives you investment, and that's what leads to higher growth. So they borrow, they invest, and they have balance sheets. So what happened was, in the boom phase, they invested a lot, but based on a lot of borrowing, and many of those investments went sour. So they have a lot of, a lot of debt sitting on their balance sheets. If you have a debt, you can't spend.
NPAs, that's another 3-letter.
NPAs, non-performing assets.
Yeah.
The flip side, the counterpart to that is a lot of banks lent to them as well. And in the Indian case, public sector banks lent to them. Yeah. And then if some of these investments go bad, the banks' balance sheets also go bad, and they can't lend, and they get frozen up as well. So it's kind of like a jamming up of the financial and the corporate system, and that slows down. Then so investment has come down. Credit has been very poor for a long time. It's at last picking up. So that's the twin balance sheet challenge. And
the twin balance sheet, the company balance sheet and
the bank
balance sheet, and both are in a mess. And that takes time to recover.
And that is why I think one of the really major achievements of the last year is the government has and the RBI together, they've acted on both the balance sheets. First by putting all these loans into the bankruptcy process with fixed deadlines, so solve them out so that you can clean up company balance sheets, and we see that process is underway now. I think we have to come back to this. The expression we use, let's not forget, from Crony socialism to stigmatized capital. We'll come to that in a second.
Okay.
Yeah. So that and just last week, government actually announced a detailed plan for recapitalizing the banks. So if we can address these two with these measures, I think the twin balance sheet finally starts getting addressed.
I remember a couple of decades ago, recapitalization of the banks, but it never had a long-term impact. So let's hope this does, but somehow you feel crony socialism
to stigmatize capital.
Now, first of all, crony socialism, normally we hear crony capitalism, but it's actually crony socialism.
Can I explain why?
Yes.
You see, this is a big puzzle about India that we've been thinking about for the last 1 year. We still have a deep ambivalence towards the private sector, right? I don't think we really embrace the private sector or markets, fully. The question is why? And I think there's a good reason for that. Let me give you 2 or 3 reasons, and that's why I want to go from crony socialism to stigmatized capitalism. That I think private capital in India, it was midwifed and birthed in the era of the license permit control Raj. Right. So it's always the stigma that the private sector got ahead because of crony socialism, that you got the license. Right. There are lots of stories about how entrepreneurs mastered the Indian tariff code and manipulated it to their advantage. So that's the stigma. And then in the 2000s we saw, remember that all these scandals, Spectrum, land, etc. Then there was this brief interlude, good capitalism in India, the IT boom, right? Now, even the IT sector is not doing so well, right?
But that's not stigmatized. So you're
No,
right in the sense. People feel they've run it on their own
Exactly.
merit because they've done it abroad.
Yeah, the IT sector was, good capitalism, governance standards, internationally competitive,
Correct.
distance from government, all of these things. But, all the others, the spectrum, the land, the telecom, the coal, all of that, the infrastructure boom, promoters, we have capitalism without equity, no skin in the game. So all that gave rise to stigmatized capitalism. Began crony socialism, ending up stigmatized capitalism. And I'm not just using these phrases to be clip, but it has a very powerful point here, that when you have stigmatized capitalism, it's very difficult to get away from the twin balance sheet challenge, because people think that anything that you do, you're helping the fat cats.
Right.
That's the stigmatized capitalism, the overhang. So to be able to take action in this, what we call mahal of stigmatized capitalism, I think is a very noteworthy achievement. So if we can complete the resolution recapitalization, it could be pretty important in kind of signaling that we can get out of exit and we can handle stigmatized capitalism.
One of the big issues about stigma, how do you destigmatize capitalism in the free market?
Not easy.
And, it's
a process
to change.
Yeah, it's a huge change.
And
exactly.
one of the thoughts was privatization or disinvestment, which is again a reflection of stigma.
Exactly. Absolutely. Very good.
I can't say privatization.
Exactly. You have to resort to even linguistic, convolutions to.
Yeah, but then we've got just one Air India, and that's also not happening. Under the Vajpayee regime, there were a huge amount of privatization, made a big difference. Those companies are doing very well now. But here, why not? Why has that not happened?
Stigmatized capitalism, it's the same thing. And I think that's why I think, in the agenda we have for this year, one of the things we say is that you don't have to have a radical agenda for this year to actually further the growth process. Just have to follow up what the government has started.
Right.
One of them is Air India. If we can privatize Air India this year, which I think we seem to be on track of doing, that would be a major accomplishment.
Right.
Because that would also be, privatizing Air India, getting out of twin balance sheet challenge will show that maybe we can deal with stigmatized capitalism.
I hate to say it, but privatizing area, major accomplishment, you should add by Indian standards.
Well,
it's like when
true.
we used to do a program called The World This Week, people used to say it's the best thing on Doordarshan. And at that time, you don't know what that meant before you were born. Okay, let's look at the second worrying trend. That's about oil prices. Now, we've had years of oil prices going down. Now, oil prices are rising, and they're likely to rise nearly 30% in this year and next year. That's an IMF forecast. It's not the economic survey. So, 28%, nearly 30%. But look at it. It went down 10%, went down 46%, went down 11%, and now up to, and I hate what begs the question. This is worrying. But did we take advantage of it going down enough? I think the survey hints that we did not.
No, that's not true. I don't think we ever say that. I think, look,
and again, it's not political.
No.
We can do it.
Yeah, no. The thing is that I think it's a good question. It's a very good question to ask. I think that when oil prices came down, basically what the government said was we pass on about 25, quarter to one third onto the consumer, and the rest we use to increase public investment, reduce the deficit, and so on. So that's a perfectly legitimate. At the margin, you could say, should you have more for the computers?
Right.
But those are very
it might have
much
boosted the economy more if it had come down
you get
more.
public. So whether you want to do it through private consumption or public investment,
right?
It varies. Depends on your multipliers. It gets very arcane.
Yes.
But it's a fair. I don't think there's a kind of anybody can say
almost a crony socialist comment, but we'll
let that pass. Okay. But now what we find is, and I have to say that I didn't think, for example, oil would go back beyond $60 a barrel again. I was actually pretty confident that it would.
Because of shale.
Because of shale.
Yeah.
And so what is surprising now is shale hasn't come back, because we thought shale is profitable. So first they said 45, then they said 50, 55, 60, 65, still is not coming back to same. But I think the second factor, which I think we hadn't anticipated, to be fair to us, the first one I think we kind of misjudged a little bit, is Saudi Arabia.
Yeah.
Aramco, their oil company, is probably the biggest company in the world, they're listing it. And I think they are very keen to ensure that they get a good price for it. And so I think as part of geopolitics, I think they want to do their utmost to ensure that oil prices remain high in the run-up to the Aramco listing. That I think is also confounding oil prices. So, but coming back to that, that is a worry for us, because we know that every $10 increase in the price of oil, it reduces growth, it increases inflation, it worsens the current account deficit. So I think this is something that we have to, really watch and monitor.
As a rough rule of thumb, every $10 increase in oil, 0.25% on growth rate?
Well, roughly. I mean, mota as they say, 0.25. But a $10 increase is also about 10 billion more higher current account deficit. And then also inflation goes up by, the CPI, something like 0.2, 0.3%. Yes. So it's all, these add up. So we have to be careful about this.
Another rule of thumb I'll ask you, foreign direct investment. Every $20 billion, 0.5% on growth rate or 0.25%? Because I do remember China living on foreign direct investment of $80 billion when it was just at the starting off.
I think at some point in China even did $100 billion a year. I think.
Now they're doing 200, but a much bigger economy.
Yeah, much bigger. And last year we've done about 50, 40. 50, I think, close to 45,
50. And now it's about 30.
We did very well in 2 quarters, and it's in the latest quarter it's come back again to about $20 billion. So I think we are also getting up there on FDI.
Yeah, 100 billion would be nice.
Yeah, 100
time you did some work and got us to 100 billion.
Would be nice, yeah.
Let's have a look at a worrying trend number 3. And this is something which I suppose very difficult to predict, very difficult to know what's going to happen. This is about the stock market. Is it a bubble? And I think even the economic survey talks about it as a worrying factor. We've seen this, is it a bubble? Will share price bubble burst anytime? Is there any reason for this ridiculous growth rate from around 24, the Sensex from around 24,000 to now around 36,000, and it went up 320 points today because of you. Thank you very much, because of the economic survey. Well received by the markets. But is it a bubble, number one? And B, what happens if there is a sharp correction?
Yeah, I think the first thing, Prannoy, to note is that this is happening almost everywhere in the world. There's a huge run-up in stock prices in the US, Japan, South Korea, China, you name it, stock prices are going up. That's first point.
So they all may be a bubble, but, and you said we are decoupled, so.
No, on this we haven't. But I think what is interesting is that the Indian stock price run-up is different from what's happening, at least in some of the advanced economies, in 3 different ways. That will help us, going through this will help us answer the second part of your question. Right. One is that our Indian run-up, at least part of it happened when Indian growth was decelerating and the rest of the world was accelerating. So that was a little bit different. Second very important difference is in advanced economies, real interest rates are very, very low. And in advanced economies, the stock price valuations are being justified by the low interest rates. People say if interest rates are very low, all the profits that you earn are worth a lot. So it's in India, interest rates are actually very high. So that's another difference.
Real interest rates?
Real interest rates. That's a relevant thing for, that's how you discount your earnings. The last very big difference, rest of the world, is that in the Indian case, part of this is because there's been a massive portfolio reallocation. Because of demonetisation, GST, I think savers have moved away from gold, real estate, and interest rates were low, even from bank deposits. They've gone into, if you look at how much money has gone into mutual funds, it's huge. So there's
Is that because the real estate market has collapsed and people have moved across?
Exactly. They've reallocated their portfolio. Interest rates came down, so they said deposits not earning much. They said, let's go into the stock market. So these 3 things are very different in India from the rest of the world. That leads to the question of, therefore what? Does this mean, this is a bubble or not a bubble? Now, first, nobody knows, and nobody should make a thing. But the only thing I will say is that I think it's fair to say that historically, if you read Charlie Kindleberger, the South Sea bubble, all these financial panics and manias, and Hyman Minsky, of course, a very famous economist, there's a pattern to these things, which is that the more these valuations become very elevated compared to historical norms, the more likely they are to come down and come down sharply. Right? That's just a general rule. We call it, coming back to the mean. And so
and I think Ruchi Sharma showed this happens about every 7 to 9 years, and we've been about 8 years since the last.
So it happens around the world. So, but I think if I may have a small thing attributed to me, the
whole thing is attributed.
The higher they rise, the more watchful we should be. I think that's my thing,
right.
and because what happens is that if you get corrections, sharp corrections, that leads to a lot of panic. Capital can flow out. Savers can get very upset. Then the government has to intervene. It creates its own distortions. So I think that's why we need to watch this very closely, because remember that part of it we have to take seriously, because it's basically private investors and markets saying, we are bullish about the future. That's why the stock prices are running up. Right. But then we know that these guys can sometimes get it wrong, and we have to be careful.
We've seen it before many times.
And that's the whole history of financial.
I don't know too much about this, but an indication that there is a worry that this may be a bit overinflated, how much of a bubble or not, is that government yields have started going up, and that is an indicator that something's fragile.
So I think if you want to summarize the current conjuncture, we have this chart in the opening part of chapter 1. There are two key assets in the economy, right? Stocks and bonds, and they are actually sending two messages.
Right.
They're not conflicting or whatever, but both are true. The stock price is saying revival, and we've seen it in indicators, and that's part of the story. But the bond markets are saying we're also, we have more macroeconomic concerns. Oil prices are up. We've been worried about the fiscal deficit. Right. Inflation is going up. Right. So there's a revival and risk story together.
That's a lovely chart actually in the economic survey.
So it's a duality of revival and some risk.
And nobody knows who's going to win.
Nobody knows. I mean, this will play itself out.
So these are the broad macro. We've only touched on 6. There's a whole lot more in here, but we don't have the time to go into. So we go into some of the research you've done, and I think one of the kind of breakthroughs one of the first breakthroughs, there are many here in this survey, is getting a lot of data as a result of GST. You've got data on a whole host of factors which you never had before, and it's changed our perception on a lot of things. But the general feeling, according to the survey, that GST was a total failure or it was a great idea, badly implemented, it tends to give us data that contradicts that. For example, let's have a look at the number of additional indirect taxpayers. It's brought more people into the tax net. Number of indirect taxpayers up 50%, from 6.4 million to 9.8 million taxpayers. Okay, that is still low, etc. But the growth of 3.4 million, which is more than half of 6 of the base, is not what people expected.
Absolutely. Kapil, do you want to speak to that chart? I mean, Kapil, do you want to say something about the chart?
This is a kind of exceptional growth, we will say, and if we see the performance first round check, or we can say the performance of GST, so this is one of the best indicators. We can say that new people voluntarily come and complied for GST. Right. So this is a good indicator.
But one thing, Kapil, most of the people who've come in only at 2.5 lakhs, at the lowest level. So these are numbers, not value.
Yeah.
So that's a bit of a worry, but at least you've got them.
Yeah, you got them. No, see, I think...
no. I mean, got them like I feel sorry for them. So
no. I think we shouldn't feel... No, I think...
I mean, the way to phrase you, got them.
No, exactly, that's true. I thought I would throw back the stigmatized capitalism thing at you, but I won't. But I think what is interesting about this is, and this is something that Kapil was alluding to, that there were lots and lots of taxpayers who either did not have to register because they were below the threshold, or they could have registered under what we call the composition scheme, which is, light, it's compliance light, GST light as it were. Right. But in fact, in this composition scheme, I think more people who did not have to comply were part of the regular scheme than were in the composition scheme. So this voluntary compliance, and there's a reason why that's happened. You see, supposing I'm a taxpayer under the GST and I'm a small guy,
Right.
If I'm a small guy, I want minimal compliance requirements, right? So I don't either I don't file or I have this compliance light filing. But what if I buy from big people and sell to the consumer? I want to get input tax credits from the guy I buy. And so to do that, I have to be registered.
Yeah.
So because this is a surprising finding,
you
small
benefit
people
from registering, yeah.
small people buy a lot from big people. They don't just, the small just don't deal with the small. And that's the reason why that's.
Right.
The other thing about the GST, which I think that we should give a lot of credit for, is that, look, no question that there were teething challenges, right? But I think it's the strength of any system is that are you able to respond to that? And I think the GST Council proved, and I think the Guwahati meeting was, I think, very good in clearing up compliance, reducing rates on the 28%
But
bracket.
I hate to say it.
That
I
made
agree,
a
and
difference.
I do want to go back to what you said last year on it, and what we've talked about is that a great idea, terribly implemented. So many levels. You've got sanitary towels at a higher rate than you paid GST at a 5-star hotel. I mean, it's India. India at its worst. 5 rates, 1 rate. Have some exemptions, but 1 rate. Anyway, I know I won't ask you to comment on that. But there's another thing that
GST, about the GST, come back to the GST.
come out of it, yeah.
Which
And
I think
that
is very
is the number of, I don't know whether it's GST or something else, but the number of registered direct taxpayers has gone up. Individuals, income taxpayers, has gone up hugely. Just have a look at that. If you look at the trend line, it's rather good of you to first show the trend line and then show the increase above the trend line.
Exactly.
And not just take the whole increase, which is credit to, they keep a good check on it.
Yeah, exactly, yeah.
So the trend line would be around about heading towards that standard amount, and then on top of that, there's another 1.8 million.
I wish we could have used that graphic for it's a great graphic.
Yeah, well, it is from yours, but maybe yours is just
It's like, looks like Arjuna's arrow. And,
right. And you nearly hit now 10 million, which of course is still very low, but at least is an increase. Now, both these increases are impressive, and the question, obvious question is, are they one-offs or not?
Yeah, I think that, firstly, even if they're one-off, I think the level of taxpayers goes up quite a bit.
Yes.
But I think that the reason why I think, there's more to come is we did this exact calculation 6 months ago, and the calculation again now. And there's been I think when we did this calculation 6 months ago, we said, Kapil, correct me, we said there were extra 20 lakh or a taxpayer. 5 lakh, just 5 lakh.
Wow.
6 months ago, and now there's extra 1.8 million. So
that
it is
change.
increasing.
Yeah.
So and we need to keep this doing this constantly to get a check. So I think we will see more. So you see more on the GST side and on the individual income tax side. But the last thing, if I may just clarify, I don't know whether you have this or not. I think there's a lot.
We have everything.
Yeah, we have time. There's a lot of confusion about is the GST bringing in enough money or not. A lot of confusion on that because people, it's so arcane, I don't want to go into it, because people say, oh, this year we're only getting 11 months GST. How should we think about that? Then there's something called IGST, which is kind of lying in limbo. What should we do about that? But stripped of all this confusion, which is what we did, just say, how much were you collecting last year in these taxes, and how much are you collecting this year? The sum of all the GST, there's been a healthy growth if you do the accounting properly.
Okay. One of the actually wonderful bits of research is on climate change, and the amount of work done on that with original data and its impact on agriculture in India is really impressive. And I'm sure these youngsters.
He's our data genius here. And,
it is outstanding data, Parth. Just let's have a look at some of the findings. I mean, it's a whole chapter, so we can only touch on maybe 2-3 points. But climate change will have a major adverse impact on agriculture in the long term. Obviously, these climate changes are a long term. It says that agricultural incomes will fall 25% in the next 7 decades, unless we do a lot of corrective measures.
Correct.
But it's a great warning that it's not just something hypothetical or terrible climate change, and it will have direct effect on our farmers. Down 25% in the next 7 decades. There is, the data shows, a trend already of higher temperatures in India.
Very good, yeah.
Both average as well as outliers. High outliers are, I mean, the graph shows the outliers are worrying.
Very true, very true.
And the higher temperatures also shows the amazing negative impact that the higher temperatures are having on crop yields, especially in unirrigated areas.
Yeah.
Parth, why don't you?
Parth, do you want to speak to that?
Yeah, so first of all, I'd like to talk about Siddharth Zari, who was our partner in this project, who helped us a lot. The other thing is these extremities are immense, and the data which is there, I mean, we have IMD, we were quite thankful to IMD because we got this data. We have much more stations to report from, and that gives us a clearer picture rather than what is generally reported about as well. And
Yeah, I think I think the report says globally they're on about 200, and you've got 4,000 or something.
Again, we want to thank the Department of Earth Sciences. They've really been so generous in sharing very, very disaggregated
But
data.
what's the difference in data that the global experts use and you used?
so we
Quantity?
use the IMD data,
Which is
and
the amount, how many stations?
which for temperature amounts to around about 210 balanced panel station, which is consistent across the last
And
60
globally only about 40 or
and
something?
globally there are
45.
about 40 to 50
45.
stations, which
Wow.
is used
But remember, just to be clear,
Yeah.
all the data comes from India, IMD.
Yes, yes.
It's just that they get data for fewer stations.
Yeah, that's
But
exactly.
we get it for
So,
all
I mean, your state, such a large difference makes it much more
yeah, makes
reliable.
it- yeah.
I mean, I think that whole chapter is very informative and very important.
Can I just say on that, I think that agriculture, because agriculture is a very important subject. You know, just to, Prannoy, just to share, make a confession here. When I used to work on India and study India before coming to India, I worked on manufacturing, services, growth. I never worked on agriculture in India. But having come and been in India, I've realized how important agriculture is for so many reasons. And that's why I think in the long run, if we want to get agriculture up and going again, one of the things is this distinction you made between irrigated and
It's
unirrigated.
the answer to
Yeah. See, 70 years after independence, only 45%
45%.
is irrigated. 100% should be irrigated. But now,
spot on. I mean, that is our biggest, by the way, PhD in agriculture.
oh, I see. Sorry,
Agriculture.
I should
I'll talk to you about soil moisture content and things
Okay,
like that.
but the difference is that now we've got to spread irrigation against a backdrop of depleting water tables and water scarcity.
Yeah.
So drip technology, sprinkler technology.
Fortunately, they are available
With-
as help, but still it needs to be implemented. And I think this shows it's crucial for the,
But can I say one thing? Maybe you've covered it in your PhD thesis. I should go back and read it.
yeah.
See, I think the thing about agriculture, which I think is very important to understand also, is you and I and all my bright youngsters here can give you 25 ideas on what to do. But no sooner have I given it, the question will come back, why hasn't it been done last 50 years?
Yep.
Right? So, and there's no very good response to that. So I think one of the problems here is that agriculture is a state subject. So irrigation implemented by the states. So I think part of the trick is how do you achieve this reform? How can the center and the states come together? And that's
Get
where
irrigation going, right? Spot
yeah,
on.
and I think that's why, I don't know whether we're going to come back to this at the end or not, but I think cooperative federalism as a technology for reform is something that needs to be used more and more, especially for agriculture.
That's like saying, our cricket commentators, if you bat well, bowl well, and field well, you may win the match.
Yeah.
So if we get it all right, we could. But you're right, irrigation is the key point, and perhaps one of the most outrageous, I think this chapter also makes that very clear, outrageous statement coming out from this government and various government, that we are going to double agricultural incomes in 5 years. I'm glad you don't repeat that in the survey. I won't ask your comment on that.
Okay.
Because that would require a growth rate of
12.5%.
12.5% in agriculture, which we are sort of averaging 2.5%.
See, I think that there's always value to having, aspirational kind of objectives, and you try.
That's one way to, but
you've
be
tried
a
meeting
little realistic. Even say I'll try and raise it to 4% on average. I'll do 4.5%, but 12.5%. The whole thing loses. Okay, let's move on to another most unusual and wonderful addition to the economic survey, which is kind of outside the narrow realms of economists, and that's the importance of the male child. And the kind of research you've done on that is absolutely wonderful. The graphs are pretty complicated.
I know, it's very complicated. Yeah. It took us, by the way, it took us 2 to 3 months to try and put it into simple language.
So your team today helped me make it even simpler.
Okay,
This is what
I'm going to learn now, exactly. Yeah.
it took me a bit of time to get my head around it. So this is what it says. If you look at the sex bias in India, there's a major bias towards male child. That we know, but you can actually, they've quantified it. If your last child, if you look at the last child you had, 65% of them are male. That means 35% are female. Once you have the last child, once you have a male child, you don't have any more children. So last child data, this is super. It should be 50-50.
Yeah.
65% are male. After that, don't need any more, even if it's the first or the third. And then the non-last child. That means I'm going to have more children. Only 45% are male. 55% of people who have a girl will have another child as well.
Correct.
So is that simpler?
Very, very well put. Abhishek, do you want to speak to that? Abhishek, Navu, Gayatri, do you want to speak to that?
Yeah, so we all know about the adverse sex ratio at birth, which happens because of sex-selective abortion. But there's a deeper problem which we call son meta-preference. And that's what we have tried to show, that the sex ratio is, the divergence in the sex ratio. If last child, then heavily skewed in favor of male child, otherwise in favor of female child. And we look at the difference between the two to quantify the number, and the number comes out to be around 21 million unwanted girls.
Unwanted girls.
So that's a kind of offset to Amartya Sen wrote a famous article on the missing women many years ago, but that related to the standard sex ratio which is skewed because of things like selective sex abortion, as Abhishek said, also differential survival. But what this says is that even if you didn't have all those things, you have fertility stopping rules where people say, if I have a child, well, as you just explained, we stop, but if you don't have a
if you go to someone and say, are you going to have any more babies? They say, no. Oh, okay. That means there's a 2/3 chance that you've got a male child.
Exactly. Something like that, yeah.
Something like that.
Yeah. And so that leads to this, a notion of unwanted girls, which is what we try and quantify.
Yeah.
And
unwanted
I think this is
girls, which is, it's a real tragedy. And this is the Me Too part of your survey, and I'm glad you highlighted it. I mean, of course, it has major implications for the economy because women are more productive than men. Indian women are better than men. Did you know that? Next time, data on that
why did you have to say Indian? I think all women are better than men,
especially
right?
Indian.
Especially Indian, okay.
Smarter.
Okay.
Okay. Let's move on to another completely, again, unusual
There's a Harry
bit
Belafonte thing, no? But the woman is smarter.
Yeah, that's right.
Yeah.
Yeah. I'll get that one of the lovely ones of it. This is spot on there.
Yeah.
Moving on to another interesting bit of research on, well, amount of research and development done in India. How much is it? It is shocking. India spends very little on R&D. In fact, just look at R&D as a percentage of GDP. India, 0.7%, 0.7%. China, 2%. USA 2.8. These are magnitude. And look at Israel 4.3. But even 0.7 to 2.8 or 2 is a huge difference. And I've just added one more graphic that you don't have in your survey, which you might have liked to, but with the help of your team. So what does 0.7% work out to? Let's have a look at R&D spend of India versus Samsung. That's a company. India spends $16 billion and Samsung globally spends $14 billion. That's the how little we spend on R&D.
See, but first, I think here I'm going to push back a little bit on. You've got a bit too cute with your graphics. Can we go back? Can we go back to the first one?
Which one? The one on 0.7%?
Yeah, 0.7%.
This is straight from the economic survey.
No, but the interpretation.
So are you going to criticize the economic survey?
I'm going to criticize the spin you've put on it. No, I think it's a fair point. See, remember that we have this broader notion that, and I'm going to get a bit philosophical here, right? Any assessments that we make, you can make it in what I call chronological time or development time. You can look, this is chronological time. Today, how much do you spend compared to other countries? Right. But remember, there's a natural progression. As you become richer, you'll spend more.
Right.
So you've got to take account of that.
Right.
But even after doing that,
I think the survey does, and even after that.
after
yes,
doing that,
yes.
I think the trajectory we're on,
Yes.
we may never reach that, and that's why. So the two
And
things.
this is so important in the world today.
Yeah.
So I'm glad you focused on it. So how do you improve this? How do you boost this?
So I think that, but the comparison with Samsung is actually very good, because what we see in India is that, so we need to increase this R&D spending, and we need to more of it coming from the private sector than we do. And I think one of the ideas we advance here, and I think that this chapter has benefited a lot from inputs from Professor Devesh Kapoor at the University of Pennsylvania. He's the inspiration for this chapter in some ways. And also, the Secretary of Science and Bioscience and Biotechnology and Science, and the other two secretaries work closely with them on this. Is it possible? I think one idea we have is that could we do this not just generically spending more, but by identifying 6-7 big missions, kind of to
Yes,
give a
you
focal
mentioned
point
6 of
to
them.
this, genomics, crops, agriculture, quantum
I have a
computing.
slight criticism about those 6
Yeah.
projects that you mentioned, but your team tried to clarify it, but I want to get it from the boss himself.
Okay.
They sounded a bit like crony socialism, that the government projects and government in R&D ain't going to work.
See, I think that I just said, Prannoy, that most of the increase in R&D has to come from the private sector by
Yes.
way of spending.
Yes.
But I think that all over the world,
Government
government has to
can
be
boost
there.
it, yes.
Yeah. I mean, defense purchases are a big contributor to R&D spending.
Right.
There's a great book by a European academic called Mariana Mazzucato, and she shows that almost you take Apple, and almost everything that's R&D you can trace back to something done in either defense or some other part, space, or some other part of government. Yeah.
You do talk about dark matter in your
Yeah.
survey, but I thought, why not dark energy? Why only dark matter? I think I stumped them on that.
Yeah, that's good. That's good. Yeah, that's good.
Okay, let's move. One other twist which I didn't say, 7% of our low GDP and 2% of China's high GDP, or 2.8% of America's enormous GDP, the amount of R&D, but I didn't say that. But, since you criticized
This is the economic advisor in you coming up.
shocking. No. Okay, let's have a look at the slightly worrying thing about ease of doing business. What is needed, the survey says, is timely justice. And I've been very careful here. Government success rate in the amount of cases that it files, I've said wins 20%. I could have wins a paltry 20%. It is shocking. Wins only 20% of his cases, but look at it. And the government, as a percentage of total number of cases, 85%. So it files the most cases and wins 1 in 5. And the ease of doing business, I'm obviously hit by this.
Utkarsh, you want to speak?
Yeah, so this is the idea that Boss came up with like cooperative federalism. There should be something like cooperative
Boss
separation
always
of
comes
powers.
up with good ideas.
Yeah.
All the bad ideas are you guys.
Yeah.
No, Utkarsh contributed a lot to this.
No, of
his
course
baby,
he did.
yeah.
I know, but all of you, I know. He
And-
just takes the credit.
And this is the government end
I
of the
do that.
situation.
They do the work, I take the credit.
Exactly. Utkarsh, yeah?
So this is the government end of the situation. We've highlighted a lot weight on courts and tribunals as well, but this shows that a lot of the litigation is almost unnecessary because, and this is not just sort of an overall aggregate picture, but at every level, at the tribunal level, at the high court level, at the Supreme Court level, you repeatedly see large filing by the department despite very low success rate, and sort of no one's taking cue from this terribly low success rate.
Excellent research, and it does point out the implications of just keep filing. So should there be, how do you solve this? Should there be some disincentive to, because now if you file a case randomly and you don't win it, no effect on the officer. He just files the case, arey chalo, lagao. And the process is the punishment. A lot of multinationals say, false cases, I'm going to win it in the end, but 5 years, diversion.
But by the way, can I say stigmatized capitalism has something to do with this as well? Because remember that, supposing not filing a case or withdrawing, people say, is the government withdrawing because it's actually favoring some private sector party or not? and then there's
That's
the whole
right,
CBI,
that whole
CBC,
attitude.
the
So
three
to change
Cs.
that is,
Yeah. So I think
but
it's,
it is a mess.
yeah, and one of the things that the other data. This is just the tax cases, but if you look at the pendency and delays in the high
Awful,
courts,
yeah.
Supreme Courts,
We've
appellate
just given
tribunals.
an average, but it's
Yeah.
awful in all the courts. We are running out of time, being shouted at in my ear. Those are my bosses.
Yeah.
And just having a look at another wonderful factor that you brought out, it's about education in India. Are we doing enough? And you'll be surprised. There's a huge education deficit, which the economic survey brings out. India is falling way behind in education. And we're a country where we are proud of our IQ and our entrepreneurship and our abilities. But just look at that. India, 25%. This is percentage who attain basic competency. These are secondary pass students. And India only 25%. Indonesia, about the same, but even they're higher than us. And China, 90%. I thought we were way ahead at least, or could be way ahead of China on education.
No, I mean, one of the great contributions of Mao and the Communist Party was, in fact, to say education and health
Yes,
for
yes,
everyone.
yes,
I mean, we forget that about the early Chinese leadership.
Yeah,
I
that's
think in the
very
case
true.
of India, there's good. See, the good news is that enrollment is up almost, 100%, right? Right to Education Act and all of that. But I think successive, a lot of survey done by Pratham, the annual survey of education report,
Right.
shows that learning outcomes, and this
Yeah, it's been
others
shocking.
have documented as well, learning outcomes are not keeping up. And I think that, I think here's what I think is really something that people should internalize much more. This data, this 25% is relative to a very basic standard.
Yes.
You see, if you think about where they should be relative to their grade specific, and then technology going forward is going to be more demanding of labor, because
And
more education.
I hate to say this, Arvind Subramanian, when we get trainers coming out here, they say these are the brightest students we have ever trained. Indian students are the brightest, and this is what we do to them, this kind of education. But we have to end there. Congratulations on a wonderful survey. Many of them felt, well, if you say all this, nobody will read our survey, but let me tell you, all I've given you is a tip of the iceberg. There's lots more to read, lots more detail, and really, it's difficult to get hold of an actual copy of this, but it's all available online, right?
Yeah,
Fully
it is,
and
yeah.
easy to get to.
Yeah.
Do read it, worth it. Thanks very much indeed. Thank you.
It's such a pleasure to be on your show always, Prannoy. Great conversation.
And because you've got the backup, that's why you're confident. Thank you all very much. Thank you. Really wonderful. Great work. Thank you.